Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the US. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the US and GET in Canada. Find out more at glancepay.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen. His website is thegoldandOilGuy.com. Welcome back to the show, Chris.
Thanks for having me, Jim.
The major stock markets in the U.S. keep ringing bells when they close, but there's more bell ringing happening even during the middle of the day because they're so darn happy about where their levels are right now.
Yeah, well, you look at the markets. Here we are on Tuesday, and the markets they had some pretty good panic selling there last week. We saw the VIX spike up. We saw a lot of panic selling on the NYSE and put in a bottom. And here we are 4 days later, with more or less the Dow, the SP 500, the Nasdaq, the Russell 2000, all pushing to new highs. And it's on relatively light volume, which is always a little bit of a worry sign, but the market is in buy the dip mode. And, you know, we had a spike in the VIX. It wasn't huge, and it's reversed right back down in 4 days, and we're back down to zero fear in the market, to levels that were only really reached back since 2007 when the market topped out for the last major bear market. So, you know, the market it's resilient. Every time we see some distribution, some heavy volume selling, we've seen 1, 2, 3, 4 of them in the last about a month. These intraday sell-offs get bought right back up, usually by the end of the day or the very next day, and the VIX falls right back down to the bottom, and there's no fear in the market. And of course, here we are with the indexes all hitting new highs. All over the media, everyone is happy every day or every month. It seems the market kind of grinds to a new high, and you know it's a warning sign. But right now the trend is still in an uptrend, and until we have a big crack to the downside and some type of significant reversal that shows that we're topping out, it's hard not to be long equities and continue to just ride this and just be cautious about position sizing.
Is this a case of people just don't want to miss out on that last little bit of profit before a correction takes place?
Well, the mindset of the masses isn't so much that. They actually think the markets are going to keep going up for another 10 years. They have no fear that the market's going to sell off. They're actually tired of missing out of the last, 8 years of higher prices, and they're finally giving in, saying, get out of bonds. That is so over with and done, and they're all moving over into equities, and it's that last bunch of people really kind of just giving up and tired of watching these markets, going against what, some financial gurus are talking about, how it's going against, the countries are bankrupt and debt keeps rising and all this stuff. It's going against kind of what people think it should be doing, but so it's just people giving in and finally just buying. And yeah, there will be a group of people trying to squeeze the last little bit out because there's more technical traders think that it could potentially still have a fairly decent run here. Usually some of the biggest moves in a market, whether it's an uptrend or a downtrend, happen right before a reversal, meaning we could see price here. It's been on a nice tear the last couple of months, but I mean, we could see a pop and run very vertical. And that would be like the feeding frenzy, the total euphoria, everybody piling in. And then that's when you see a big sharp reversal and a massive bout of selling that could last a month or so and completely damage the charts long term and indicate, okay, that actually could have been the top, and now we need to see how it recovers and things. So that's kind of where I think it is. It's the masses just giving in and buying every dip, and now people just think they can buy every single dip, and eventually they're going to get caught holding the bag with huge positions in stocks, pretty much all stocks, many of them small cap, leveraged, high beta stocks, meaning if the stock market moves up 1%, their stock moves up 2 or 3%, and vice versa. If the stock market falls, these higher risk stocks that a lot of people move into that have been performing exceptionally well fall 2, 3, 4, 5%, while the markets fall only 1. So it cuts both ways, and if you're on the wrong side, it definitely hurts.
Is there any one market or area that seems to be hotter than another?
Well, the NASDAQ's been leading the way for the last couple of years. It's tech heavy. The FANGs have been doing a lot of the heavy lifting, Facebook and Amazon, all those companies. The tech in general has just been on fire. And I actually wrote an article about it a few months ago comparing the tech sector, the tech index, with what the tech index looked like back in 2001. And man, you can almost lay them right over top of each other. It's insane how identical they look. And here we are with that exact same type of setup again. And we're finally getting to that level of the market where there is no fear. We haven't really had a new QE program, yet the markets have exploded higher. This is the first time the markets have had a run this big and this long without a new QE program being put in place. And it looks and feels like this is the last major push, the leg higher in the market before I think we put in a significant top that we may take it another decade to break this level going forward. So the tech is definitely the leaders, and the leaders eventually become the dogs and not wanted going forward. So you got to be very aware of that.
Well, I know with the .com collapse, many of those companies, most of them didn't really have a product to sell. They were more just a well-designed website. In this case, are real products being produced by these .com people to give them a little more than just a fancy, outlook?
Yeah, the online tech companies now, I think a lot of people learned that whole bubble was a bubble because people were selling websites that if you build it, they will sell and make a fortune, but that wasn't the case. Everyone had these fancy looking sites and nobody had a dime of revenue. Instead, they're costing millions, to just keep running. Now, tech companies are run a lot different. You pretty much, they have products, they have services, they have reoccurring services or billing income. So they're built a lot different, but still they've had massive runs. The earnings ratio, PE ratios are, everything's out of whack, stretched really high, and the markets are like a rubber band. You can stretch certain ones a little farther than others and outperform, but when you let go, they also go the other way equally as much, and that's very, very much what will happen eventually. But yes, tech companies do nowadays, many of them have good products, services, and they have real income. But again, they're still pretty overpriced compared to historic norms. We're up near the upper end of the range of prices that we shouldn't see these last a whole lot longer, these overvaluated stock prices.
We'll have more with Chris Vermeulen right after the break.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're chatting with Chris Vermeulen. Has this exuberance on the major stock markets also extended into the small caps on the Russell 2000?
Yeah, it has. We've seen the Russell 2000 was underperforming here the last month and a half, had a pretty good drop in the last 2 weeks, and, in the last 4 sessions, the that small cap index has just exploded higher, pushing up to new highs. It's had 4 big back-to-back rallies, and it went from more or less being kind of underperforming to now it's right up there pushing to new highs. And this is a sign that people are not afraid to buy into stocks, and these are the riskiest stocks of all. And it kind of tells us that people are absolutely not afraid. And the VIX shows us this as well. People are not afraid of stocks, and now they're piling into small caps. And to me, again, I feel as though this market is getting very close to a top. That being said, as long as we can keep seeing these critical support levels, we keep seeing higher lows in the market. As long as these lows aren't broken, then the market is still in an uptrend, and that's what small caps are doing. They've been slowly making higher lows and higher highs, and here we are back at a new higher high, and there's a lot of money piling into these small cap stocks, which are definitely the most exciting to trade, which is why they kind of will perform pretty well here when there's no fear in the market, because these little stocks move easily 5 to 10% a day when you get into small caps, and they've got some wild price action and great day trading opportunities. So we have been seeing money and volume pick up into these small caps the last week, and I think that again is just showing that there isn't fear in the market.
Does this mean I'm going to start seeing more of those infomercials about how you can be a hot day trader and make a fortune? Because I remember seeing the same things just before the 2007 crash.
Yeah, I don't watch TV, but I'm sure that would probably be something like that would be happening now. The markets are on a tear. They have been for a while, and it makes sense. I have been out of that whole TV and the marketing loop. I remember, just like you back in the day, there used to be TV ads all over the place for swing trading newsletters and day trading software and all that stuff. And I really haven't seen that in a long time, but I don't really watch the financial channels at this point. So this would be the time that they seem to bubble to the surface, and you might start seeing them come out because everyone's excited about the stocks, the stock market in general, and trading. And if you can buy every dip, and within a day or 3 you're back to in the money, it seems like a no-brainer, and people will be selling on that kind of type of market condition and taking advantage of it.
We'll have more with Chris Vermeulen right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Chris Vermeulen. Chris, what's happening on the gold market, both for bullion and for the miners?
Yeah, well, gold, silver miners in general have been really just taking it easy. They had a really strong run back in July to September. Very big move up in all of those. And since then, since September there, the market rolled over. It's been fading lower, and they're really out of favor because everyone is bullish on equities. And if the stock market keeps moving higher, then people aren't, and they're not afraid of the market rolling over, then there isn't a lot of demand for people to want to get into precious metals, especially because they've been out of favor for so long. Overall, the long-term picture of metals is very, very bullish, but I still think we could easily see the metals, the miners, move down for one more little leg, and we could see another 10% drop in those markets very easily before we continue to see or find a bottom and see those move up. And there's a fund out there called GLTR. It's an ETF, and it's a basket of just precious metals. It's like palladium and platinum and gold and silver. And, you look at that chart. I kind of like to look at that just for a bearing of what a basket of precious metals in general are doing. Because, gold and silver, you can argue, are highly manipulated, and you might get blinded by their price action. So looking at this basket of other metals, precious metals, you kind of get a feel for what kind of price action the precious metals sector in total is doing. And it still has a very similar price action to gold, silver, where it's been holding up, trading sideways for the last month, but it still has potential for another, 5 to 8% drop in precious metals to the downside before it might find a bottom. And it has a bearish formation at this point. And if that happens, that means equities are going to have another push higher. They're going to rally for another week or three. And we could see the safe havens kind of fall out of favor, complete the ABC corrections that more or less precious metals sector is doing, which is a bullish correction, and we should find a bottom. So that's kind of, that precious metals sector is in limbo here, waiting. It feels more bearish to me that we're going to see it kind of flush down first. We're going to see equities continue to move higher. But when gold and silver and miners all get down to their critical measured moves, their support levels, that could be the time when we see the equities market top out. And it's going to be interesting because back in 2015, we had that huge August crash in the markets. Nobody really expected it. It was like a 4-day thing. It was just, before you could really get a grasp of it, it was over. The drop was massive. This year, we haven't really seen anything. We haven't seen any massive drops. We're not seeing any crazy high volatility. We're seeing increase here and there, but nothing significant. October's usually a bad month. It wasn't. And I kind of worry what could happen going into December this year. We could see, there's potential we could see a large drop in December, which would buck the trend, definitely catch everyone off guard. So that's my only concern, as we see equities actually top out in December sometime, and we see precious metals actually bottom right in the December timeframe.
What's going to happen with crude, because it's remained strong for a lot longer than it traditionally does going into the late end of the year?
It does, yeah. Well, crude oil broke above that $55 per barrel mark, and it rallied up, had a nice 2 or 3 day pop in price that actually filled a gap window from back in 2015, which I've showed subscribers a few times, and that gap window was perfectly filled, and now price has been oscillating and chopping around the last 2 weeks in this range. And crude oil, it has been performing exceptionally well. Energy stocks have had a really strong rally over the last month and a half, 2 months in general from the lows. And it's really interesting because typically near a bull market top, we see energy start to outperform and do well when you look at the overall stock market cycles of what sectors become in favor in the late stages of mature bull market. And crude oil has been having a nice strong move up. The energy sector has had a nice move up. And energy stocks are usually, or the energy sector in general, is usually the one area that usually performs very well right near the end of a bull market. And I think we touched on this last time we spoke. If you look at the Toronto Stock Exchange, it has had a beautiful rally for the last couple of months, pushing up to new multi-year highs here, or new all-time highs actually, and it's loaded with energy stocks. And the Toronto Stock Exchange performed extremely well just before the U.S. stock market topped out last time. So things look to be unfolding. We're in that final stage. And the final sector that performs, the next sector to start performing well, will be more or less the staples, the healthcare stocks, because you need health and you need, obviously, staple products. So those are going to be the next ones to start to perform really well. And it's very interesting to see how the market cycles work and which sectors become in favor and out of favor as we kind of mature through the different stages of bull markets and bear markets.
Chris, thank you so much for chatting with us.
Hey, always a pleasure, Jim. Thanks for having me on the show.
My guest has been Chris Vermeulen, his website, thegoldanoilguy.com. You're listening to HowStreet.com radio. If you have any questions for the show or our guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of How Street Media Incorporated.